What's up, everyone? It's Karthik of MoneyVest. So markets are just gearing up for a very interesting month of October. September so far has been very volatile, but it looks like we are still going to manage to close green in the month of September with just 3 more trading days left in the month of September. We'll find out very soon if the markets can finally snap out of that September seasonality and close out green. But on the day, we had the NASDAQ. There's the only index holding up a little bit higher, 4 basis points in the green. We had the Dow Jones dropping almost 300 points and the S&P 500 down over 19 basis points as well. Got lots to discuss in this video with a lot of economic data that's been released and is also coming out tomorrow and Friday. We've got some other analysts being very bullish on Tesla, and I'll also go over October seasonality. I took the liberty to put together a spreadsheet for all of you to go over how the volatility and the markets perform in the month of October. That's exactly why I want everyone to be ready. Get cash ready, get ready in order to take advantage of that October seasonality if and when we actually do see volatility spike back higher above 25 or 30 levels and the markets see a little bit of a pullback or a correction. That's when we are going to start becoming very aggressive once again and turn up on that dial of risk and reward. So that's exactly why I want you all to share this video with your friends and family. Do me a favor, drop a like, subscribe, and share this video with your other traders, investor friends, and anyone who can take advantage and essentially get a lot of information out of this video. So I would really appreciate that. Let's get to 85,000 subscribers by the end of this month. So fingers crossed. First things first, the options portfolio. So unrealized gains are now approaching over $10,000 on this portfolio. My long equities are now crushing it over $100,000, but of course I do have some short positions on Nvidia and Tesla as hedges because these are covered calls. So if the price actually drops, these calls are going to actually make money, but right now they're both in the money. I actually ended up rolling my Nvidia calls to 10.11. So that's going to be the update there. And for Tesla, which expires this Friday, this was a buy right. So I bought the shares, I sold the calls immediately, and they're going to be expiring on Friday. Call strike is going to be 250. I'm still undecided a little bit. I'm planning to roll these out to next Friday because everyone seems to be very bullish on Tesla right now. And the net credit on that roll is a very solid $5 per contract. I'm sure I can get at least up to $6-7 per contract tomorrow or Friday with theta decay. So I'll see what that option kind of looks like and where it's priced. So I'm a little bit undecided on the Tesla option, but the Nvidia one has already been rolled out. So again, if you want to get access to all the alerts, find out exactly what I'm trading every single week, I send out updates and alerts on Fridays and Mondays. I send out members only videos on the options portfolio every single weekend. And this right here is the update so far with accounting for where we are right now, where this portfolio is for myself, up almost 6% since I started this on Patreon. And the S&P 500 during that time frame is up about 1.5%. So again, doing pretty well. And year to date, this portfolio is up now a little bit over 32%. So if you want to learn how to sell options, generate some income, and also do it in a very disciplined approach, right? So we're not taking on crazy amounts of risk. I'm also not buying options. I'm mostly selling options and doing it on underlying stocks that I feel have the most highest quality for the long term. So link's going to be down below. There's 3 more spots left with that 16% annual discount that expires at the end of this month as well, just like my call options expire this week. So link's going to be down below. We'd love to have you on board. So first things first, utilities once again getting a little bit of a traction here, up about 0.5% on the day. Then we had technology as the second best sector, up over 29 basis points. QQQs was essentially flat. SPY ETF down about 22 basis points. And then everything else was red, with the TLT ETF down over 83 basis points. Healthcare down almost 1%. Energy down almost 2%. Financials down over 60 basis points. Real estate, industrial, discretionary, comm services, staples, industrials, everything you name it was down anywhere from 20 basis points to as much as 2% on the day here. So S&P 500 down 19 basis points or almost $100 billion. However, we did see Big 3 pushing higher, $72 billion. Magnificent 7 was up over almost $70 billion. And top 10 stocks were collectively also up over $68 billion. So this, again, doesn't do justice to how much selling there was intraday because, some of the biggest stocks here were selling off $15 to $20 billion. So we had Apple, Amazon, Google, right? So 15, 10, That's the $10 billion worth of sell-off in these companies. ExxonMobil was down almost 10 billion. Amgen was down almost 10 billion. Then we had Visa, as it continues to sell off, down another 1%, a little bit over $6 billion. And then Chevron and Johnson & Johnson also selling off over 5 to as much as $6 billion as well. And these right here were the companies that were pushing up. Meta released a brand new Quest. I think it's called 3S. I'll talk about that later in the video. Almost $300. New virtual reality headset. And it was up a little bit closer to 1% on the day, $13 billion. Microsoft, almost $22 billion. And Nvidia pushing up, of course, $65 billion. Nvidia's kind of gotten away from me right now, considering the fact that it's trading at 123, 124. That's actually one of the reasons why I had to go out in expiration 2 weeks to October 11th. And I'm not going to go out any farther than 1 month. 1 month is kind of like a threshold. It's still manageable, but anything over 1 month becomes just too long of a time frame for me when I'm selling or rolling options. And I used to sell monthlies, but I've kind of come down to weeklies, because weeklies I can roll out, but I can never roll in. So if I'm selling a month to begin with, right, I won't be able to roll in, right? So, and I won't be able to roll out either, because that's too much of a time frame, right? So what it allows me to do is roll out to another week or maybe 2 weeks, and the max I'm going to go up to is at least a month. And so we'll see where Nvidia goes in the next couple weeks here. Nvidia would need to drop a little bit over 9.5% in order for me to come down to my call strike. And that's still going to make me super profitable, because that call already paid me the premium and my capital gains are capped at 112. So that's the price that I'm really looking forward to. If it doesn't, that's also fine. I'm going to keep rolling and milking as much premiums as I can get from Nvidia as I'm running the wheel strategy on that. Walmart here up almost 6 billion. Salesforce, Broadcom, and Intel also were some of the companies that were pushing up on the day. Now coming over to October seasonality, as we only have 3 more trading days left in the month of September, I wanted to go over October seasonality in this video to help you better understand what is expected out of the month of October. October is also one of those months that forms market bottoms many times. So I'm going to be doing another study to go over how many times October was the month where the markets bottomed after a sell-off begun. Because we remember October 2022 was literally the bottom for the S&P 500, and since then we have just been ripping higher after that bear market. We also witnessed a bottom in 2021. We witnessed some bottoms in 2022. So October has almost, not always, but almost always has been a month where the bottom's been formed and then the markets start to recover back up, because we're coming off of that September seasonality. However, this time around, things could be a little bit more different, because September was not the month where we saw that selling pressure, because usually the last couple of weeks of September are red. So going into October, we're starting to see that ripple effect, right? So we're kind of tipping into October with that September seasonality, and that's why the October tends to be a bit of a month where the bottom gets formed, and then we start ripping into November and December. But this time around, right, in 2024, September has been a month where the markets are trading at all-time highs. Yes, we started off on the wrong foot in the first week of September, but we quickly climbed our way out of that September seasonality, and now all 3 indices, I think, are up on the month of September. So if you come over to SPX, on the monthly time frame, up 1.3%. The Dow Jones is up over 85 basis points, and the NASDAQ composite is also up over 2%. So yes, all 3 indices are up in the month of September. Now, that being said, if you take a look at volatility, and that's really where I want you all to focus on, okay? Now, volatility tends to be higher in the month of October, especially if you consider election years. It is definitely higher. Now, if you scroll down a little bit, you'll notice the average and the median gain for the month of October is just over 2.2%, with a win percentage of 61.5%. So 61.5% of the times in the last 13 years, going back as far as 2011, S&P 500 has been higher by an average and median of over 2.2%. However, I really want you to focus on the VIX, the volatility, okay? The average 26, median is 24, with a 77% probability that it is more than 20. And where are we right now? For the VIX, we are at 15.4. So 20 would mean a spike of 31%, and 25 would mean a spike of 65%. So anywhere from 35 to 65% is something that we need to be prepared for. Over 25 is a 38% probability. Now, if you were to reverse this a little bit, where are we trading right now? 15.4. So in the last 13 years, volatility below 16, which is where we are now, has only been 7.69%. Okay? So in other words, where volatility is now at 15.4, in the last 13 years, volatility where it is now has only been here 7% of the times. 93% of the times it's been higher than where we are at the moment. So that just goes to show that, okay, October could be one of those months that could spike volatility again, especially if you consider the elections that are coming up in the first week of November. So there's definitely going to be a lot of uncertainty around elections. We don't have an FOMC meeting, but we do have the Fed meeting in November also, right around the elections day. So elections going to be on November 5th. FOMC is November 7th. And not to mention brand new unemployment numbers, brand new inflation numbers. So in my opinion, with the uncertainty there is regarding whether we are in a recession, going to go into a recession or into a soft landing, along with the election catalyst and the FOMC and the October seasonality, there is probabilities that we are going to see the VIX spike in the month of October. But fear not, that is only going to create buying opportunities for us. That's exactly why I want you all to be ready. And because those buying windows are going to be small, right? Those buying windows have almost always been small for us to dollar cost average into. That's exactly why I want to take advantage of those opportunities. And this right here is a little bit of an expanded study in the month of October seasonality here. And what you'll notice is, again, 62.5% of the times October is higher by on average 1.4%. This is going back as far as 2000s. If you go a little bit further back to 1975 or 1950s or 1900s, again, October tends to be a bit of a coin flip with slight probabilities of a green month than red. But November is the time to be in the market. And November this year is also, again, like I said, FOMC and elections. But since 2000s, November has been the best month for the market. 75% of the times we've been higher with an average gain of over 2%. Since 1975, 73% of the times we're higher by over 2%. So October could represent a huge buying opportunity for us to dollar cost average into, be a lot more aggressive, deploy cash. I have a plan in place where I'm going to be buying a lot in October, getting ready for the last couple months worth of rallies that we can expect from the markets, and especially post-inflation, post-election clarity and certainty with the markets can also lead us to a very nice close for the year. Now, Goldman recommends buying Tesla call options before two big catalysts in October. So I guess we know who is really bullish on Tesla. I mentioned this in our Discord as well. And there's not two catalysts, there's three big catalysts. We've got the robotaxi event, we've got the earnings, and we've got the delivery numbers that are coming out for Tesla. So really just those 14 days is where Tesla is going to be very volatile in my opinion. And this was from Bard. They also said buy Tesla stock ahead of these significant positive catalysts. Bard sees Q3 deliveries well above expectations given upbeat third-party data and lack of inventory, essentially factory downtime. So I got two very prominent institutions coming out with two calls on Tesla here. One recommending investors to buy call options, and the other one essentially straight up saying to buy Tesla ahead of significant positive catalysts here. Just want to be very careful that Tesla has already run up a lot. So we do have a buy right on that as part of the options portfolio, and also do I personally do own shares in Tesla as a long-term investment, right? So that's going to stay intact, not making changes to that. But the options wise, yes, I will be trading that going into next week as well. We'll most likely rolling those contracts out to next Friday. We'll update everybody on Discord. And this right here is the options market suggesting for S&P 500's implied volatility. Once again, if you take a look at where we are in October, not a lot of volatility expected in the markets. However, keep in mind that volatility, it tends to be slightly higher in the month of October, especially if you also consider the backwardation as we are looking at the M1, M2 futures for VIX. But going into November here, the market's implied volatility or implied daily move is significantly higher going into November 5th and November 6th. So those right there are the dates to keep in mind for where the markets are going to have a lot of back and forth, a lot of indecision possibly, but post-election, as I've already mentioned, I do expect some significant upside to close out the year. This right here was also a research study suggesting for surging AI demand could cause the world's next chip shortage. So a surge in demand for artificial intelligence, focused semiconductors, and AI-enabled smartphones and laptops could lead into the next global chip shortage, according to a report released by consultancy Bain and Company. And they said the surging demand for graphic processor units, GPUs, has caused shortages in specific elements of semiconductor value chain. If we combine the growth in demand for GPUs alongside a wave of AI-enabled devices, which could accelerate PC product refresh cycles, there could be more widespread constraints on semiconductor supply. And as we know that when there is a shortage of anything and there is a significant demand, what happens to prices? They go up. And that's exactly one of the reasons why I am so bullish and will always continue to be very bullish on SMH, right? So SMH is the ETF that I will continue to dollar cost average into. God, you guys know SMH is a semiconductor ETF that has a lot of individual stocks, like I think over 30 stocks of semiconductors, including NVIDIA, Advanced Micro Devices, Micron, Qualcomm, TSMC, all those companies, and will continue to dollar cost average into that ETF as well. So Meta also unveiling $299 Quest 3S VR headset, Orion AR glasses prototype. So this again is another huge catalyst, which is competing in the metaverse and the virtual reality headset. I guess a more specific and detailed video on Meta has to be done, but this right here, once again, a new product being launched by Meta. Quest 3S starting almost at $300 to run VR fitness apps, gaming, watch movies, all that cool stuff. I'm actually thinking about getting a VR headset as well. Now, when it comes to some economic indicators that I really want to go over as well. So we also learned about the Fed Manufacturing Employment Index contracting down to negative 21. And that is the lowest level that we've seen since April 2009. So the index has been in a contraction majority of 2024 and even sits below the pandemic lows. Furthermore, employment expectations for the next 6 months have fell to a negative 12 points, lowest level since April 2020 as well. The manufacturing industry appears to be in a severe recession. Is this really going to be a quote-unquote soft landing? And I think that's really what we have to also understand, that the economy and the markets are two very different things. And if this were to continue, we're also tracking a lot of other data points that are going to be very important in our understanding of how well or poorly the economy is really doing. And from this perspective right now, it does seem like we are more weak than we are strong from an economic standpoint when it comes to retail sales, unemployment growth, which is unemployed persons essentially going up. We've added over 1 million people that are now unemployed in the last 1 year. JOLTS to unemployed persons ratio, personal savings rate contracting down to one of its lowest levels at under 3%, manufacturing PMI in contraction at over 47%, services PMI, loan growth, everything has been relatively weak. The only strong parts of the market, of course, is the unemployment rate itself at 4.2%. The initial claims, which is not really moving much, still well within the pandemic levels, and of course the recessionary signal levels, and also the GDP that's growing. We've got the GDP numbers coming out tomorrow, and consumption expenditures also coming out on Friday. So those things could turn from strong to normal to somewhat weak to relatively weak if, of course, economy continues to deteriorate. So those are things to very much keep in mind, because those are two things that are going to lag each other. Right? So markets obviously move faster and the economy is going to be lagging behind. But if the economy starts to really deteriorate, the market's going to price all that information in, and we already know it's not going to be good news. Mortgage applications, the refinance index jumping over 20%, and the composite index up over 11%, and the purchase index is also up over 1.4% as well. I feel like a lot of people are refinancing their homes already on this 50 basis point cuts, because the banks are going to be calling people left and right to try to refinance and pay up whatever $2,000, $3,000, $4,000, $5,000 in upfront closing costs. But in my opinion, I think home buyers and just home owners in general are better off waiting right now until we have a better read on where interest rates are going to settle down to, because we already know the market's indicating for another 3 rate cuts. The Federal Reserve themselves have penciled in for 2 more rate cuts. So if you are just patient enough, if you're a homeowner for 3, maybe 4 or 5 more months, you might be able to refinance at a better rate, because 50 basis points, yes, it's the beginning, but in my opinion, there's more potential rate cuts on the horizon. And that depends very much largely on the state of the economy and, of course, inflation as well. New home sales coming in at 716,000. That was slightly higher than the consensus of 700K. Tomorrow, we've got Jerome Powell talking at 9:20 a.m. Eastern. The GDP numbers, jobless claims numbers, and the personal income outlays and the consumption expenditures also coming out. Micron reported some very strong numbers, up over 12% after hours, on some very strong guidance and sending the stock soaring. And the 10-year treasuries has also been on the rise here. Could be because of inflation expectations, once again, are on the move here. So that's why investors aren't really fully convinced whether we're going to get a soft landing in the economy or not. So this right here is where we are with the MoneyVest dashboard right now. We are back under 4 on the MoneyVest index. Volatility readings come down to 15.4. This is the backwardation that I was talking about, so negative 2.3%, something to keep in mind. A lot of these are still flashing yellow or red. The put call ratio also dropping down to under 0.8 in the 9.5 percentile. RSI is 165. Again, majority of stocks trading above their moving averages. Got the valuation at over 23. So bottom line is we're still flashing yellow and red. That goes to show that the risk reward is not favorable as of yet, but it could be in October, considering the seasonality that we have gone over. Now, coming over to the markets now, S&P 500 first, we are pretty much at all-time highs. So there's not really much for us to discuss other than the fact that it's been a phenomenal run-up from its lows from back on September 11th, right? So 9/11 pretty much had the markets trading down to as low as 5,400, and there's been over a 300-point rally, almost 6% gain here, getting up to all-time highs. So support level is going to stay put here, 5670 down to as low as 5640 for S&P 500. So those right there are going to be a couple levels to keep in mind. Now coming over to the NASDAQ 100, we still have some ways to go. So NASDAQ 100 still struggling here, and resistance is going to stay put roughly at $487. So this right here is going to stay put as a very important resistance. That's exactly where we are getting rejected here on the day. Even on the day, we got rejected at 487, coming back down. So that's going to be that level to keep in mind. However, after hours, we're up over 26 basis points right now. Coming over to Apple stock, and Apple here slightly down about 40 basis points. After hours, it is down even more. A lot of consolidation sideways in that range for Apple, and support level is going to stay put inside this green rectangle for this company. Resistance all the way up to as much as $236 for Apple, and like I said, support at $217. Going over to Amazon, and Amazon here also starting to roll over just a little bit, down about 74 basis points. Support level is going to stay put down to 189 for Amazon. Resistance all the way up to as much as $200 for Amazon as well. So a lot of consolidation sideways. Support level is going to stay put at 189. Resistance all the way up to $201. And again, we're very overbought, overextended right now on the RSI, the MACD, and the L3 banker oscillator as well. Coming over to Tesla, and Tesla has had a very nice run up here, up over 1% to 257. My target, as you guys already know, is sitting at 267. That's going to be that resistance and that target that I'm watching for Tesla. And support level is going to stay put here inside this green rectangle for Tesla, sitting roughly at around $236 per share for this company moving forward. Talking about NVIDIA stock, the star of the day, once again, up a little bit over 2%, continues to move up to $124 after hours. NVIDIA is definitely making my life a little bit difficult here. Resistance all the way up to 129, so that's going to be that level to keep in mind next. And support level, we're going to go ahead and turn this level into a support for NVIDIA at $118 for this company as well. So it's consolidating sideways after the Jensen Huang news came out. It just ripped over almost 4% yesterday, and then another 2.5%, almost 3%. Including after hours, back up to 124. So resistance and target 129. Support level is going to stay put at 118. Coming over to advanced micro devices, so AMD pushing higher another 2%. Very nice resistance over here. Looks like after hours, it's starting to break out above this level. So we're going to go ahead and turn this level back into a support, and resistance all the way up to $173 for AMD. So that's going to be that next target and resistance to watch for AMD moving forward. Talking a little bit about PayPal and Visa. And Visa continues to struggle here, down over 1%, and it is now coming down to a very attractive level of support. So this right here is going to be that support level to watch for Visa. Resistance all the way up to $282. If it does end up breaking down below this level, the next target is going to be down to as low as $251 for Visa as well. So that right there is going to be that next level to keep in mind. Again, lower highs and lower lows over here for Visa, and that's going to be that support level to watch. Coming over to PayPal, and I'm actually going to be doing a separate video on Visa as well. So we'll talk about a little bit about the DOJ investigation and what could come out of this and what's the appropriate course of action with Visa stock as it is selling off right now. For PayPal, I would just say that it's very overbought, overextended with the RSI, the MACD. Would not surprise me one bit if it does start to roll over just a little bit, could come down to $73, $74. So those right there are going to be some support levels to keep in mind. Resistance and target we're watching is all the way up to $88, $89 for PayPal. Coming over to Meta platforms, and Meta here on the day pushing up almost 90 basis points up to 568, hit a new all-time high at 576 here, and support level is going to stay put at $541 for Meta as well. Netflix hit a new all-time high yesterday, even today getting up to 725. Support level is going to stay put at $706 for the company, and again all the way down to 661 for Netflix as well. Very nice, consistent higher highs and higher lows. It was consolidating a little bit here. Potentially a bull flag breakout that's happening with Netflix at the moment. So it was really just consolidating sideways over here for a really long time. Nice little breakout. Coming over to Google. Google's still struggling at that resistance at 165, 166. So not able to break out of that level. And support level is going to stay put down to 153. For Google. So a lot of consolidation sideways in and around that range. Resistance all the way up to 176 for Google as well. So that right there, very important resistance at 176. Another target and area of supply sitting roughly at 164 for Google. And Microsoft below that resistance here at around 432, struggling to break out above that level, support level, and that big area of demand sitting roughly at around $401 for Microsoft as well. A lot of consolidation sideways for this company. A little bit of a head and shoulders with a neckline in the low 400s. Didn't quite break out, to the downside from those levels. Instead, had a very nice reversal back up. And right now, we're struggling at that resistance of 432 for Microsoft. And finally, coming over to Enphase and Costco. Enphase continues to consolidate. I mean, this is a stock that's been trading in that range for a really long time. Support level and that area of demand at $94, $95. Resistance all the way up to as much as 143. So that's going to be that area of resistance to keep in mind for Enphase moving forward. And then coming over to Costco, we've got a lot of consolidation for Costco as well. It's been trading sideways, getting rejected at $920 and a support down as much as $872. So hope you all enjoyed this video and a complete update on the markets. Please make sure that you drop a like, subscribe to the channel. And again, links to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available until the end of this month. And you get access to the MoneyVest website. You get access to the Discord, the Patreon, the members-only videos, the options portfolio, all the trade alerts. Everything's going to be available with the link down below here. And let me know if you have any questions. As always, happy investing. I'll see you all in the next video.